guys, Mike here. So we got a lot to go over in this video, and the one thing we got was a lot of different news in the last 24 to 48 hours about the bond market, yields, which of course is driving this market, right? We have some news coming out of Japan, which I'm going to cover. We have some news coming out of the Treasury, which I'm going to cover. We'll have even bigger news coming out of the Treasury tomorrow, along with FOMC. So that's what we're getting set up for. You might have noticed, and today was a strange day in the market, and I'll show you why I think that. And it was because of what was really green today. That was, I mean, really green. And then we'll go into what can we expect in November, right? Because, happy Halloween to everybody. Can't wait to go trick-or-treating tonight. But November is here. And so what do we get to expect? We talked about August, talked about September, we talked about October. Now we'll go into November, okay, and tell you about that. And then something that the indices are doing right now, which we had discussed before, so do not miss that. Now, the big news coming out of Japan, which we've been waiting to hear right here, right, was their yield control curve, which I'm not going to get drowned out about this or too deep into this with you. But, one of the last anchors being the key word, for global bond markets was being hauled in on Tuesday by the Bank of Japan. They announced a new degree of tolerance for rising government bond yields and signaled an end to its 7-year straitjacket on long-term rates. They've been holding their rates super, super low because they're a highly indebted country like we are. A 1% cap on the 10-year Japanese government yield became a reference, and the central bank watered down language about the effort and cash it would expend to keep the rate under control. Yields along the Japan curve rose a decades high. The 10-year breached 0.95%. Imagine that now. So we're not the only ones. Our Fed did it for like 10 to 12 years, right? Holding our rates down. But they've done it for a long time. Now, as investors eyed higher rates in a debt market worth more than American dollars 7 trillion, Japan's government also confirmed on Tuesday that it did not intervene, this is important, in the currency market to prop up the yen in the past month, which we had thought they had done this. And what's important about this is simply this, ready? Recent moves to loosen control over the JGB yields has revived interest in the asset class, but it also sparked fears that Japanese investors may start to unwind investments overseas, mainly here, if yields are more competitive in their home markets. This could potentially be seismic for global financial markets. I worried as the yield curve normalized and rates go up, you could see a decade or longer of basically Japanese people starting investing in their own country versus putting it overseas, is what this gentleman here is saying. And if we look right here, the dollar versus the yen, right, shows us forward. This is when we know they intervened last year and the market rallied like crazy. The dollar didn't. Look where the dollar's at now. It had a big day today, right, compared to the yen. Big green day. And so what they're saying right here, if I spot right here, we thought they'd intervene because the dollar versus the yen dropped really fast. They're saying they did not. There's no evidence of that they did. It just happened to drop, right? And so if they do start intervening, because with their yen going higher, obviously it costs their people more money to buy stuff and it causes inflation for them. And so that's why they're worried about it. That's why they've been controlling it. Now, will they intervene now? We'll have to see, because right now the dollar is still wreaking havoc all over the globe. When you see what happened when this news came out this morning pre-market, what happened to our yields? 2-year yield spikes, and then what's the 10-year yield do? 10-year yield spikes, 30-year spiked as well, just FYI. And, when we pull out on this, you can see, our yield is going to go higher. That's really a good question. I mean, at this point in time, I think tomorrow's news from the Treasury is absolutely going to have a huge effect on this. You can see it's setting up in the same kind of pattern it's set up the last 4 times it went higher. But again, I think it's going to do with the Treasury. They're going to come out tomorrow with some news. Now, and I'll elaborate on that just a second. But if we look right here, you can see this was yesterday that they came out and they announced actually the amount of borrowing they're going to do for the rest of the fourth quarter and the first quarter. And one reason you saw a bounce in the markets was this right here, because the borrowing estimate is $76 billion and less than it was in July, because they believe there's some tax receipts coming out of California that they either wasn't accounted for, or it's going to be more than what they thought it was going to be. So that means they won't have to borrow more because they'll get more of our money, or more California money actually, of their citizens out there. So congratulations to you guys. I know you guys are heavily taxed. And so again, it's important to understand, it's funny what the market, remember the market is desperate. It'll take anything as good news. And the fact that 76 billion less, even though for the rest of the fourth quarter and the first quarter, that will be record borrowing, right? Record borrowing that we've never seen the likes of before. But the market's like, hey, we'll take whatever we can get. And that's what I said the other day. If it comes in less, you can see the market go, oh, that's good, right? Now, tomorrow, they're going to tell us how they're going to raise it, right? Is it going to be more treasury bills or treasury bonds, 1, 5, 30-year? All this stuff's going to come out. Again, it's almost way beyond my scope, so I'll read up and try to, put it out there the best I can to you guys and stuff. But we'll see. We'll know if the market is going green. One, remember, it's FOMC day, so take it easy. But two, we'll see. I mean, the market might go, oh, this is great. Woo, we love it. And yields are not going to be skyrocketing. Remember, it's not about them going like higher, inching up. It's these big moves we're getting, these very volatile moves that's just scaring the heck out of the market. Now, also remember, we're in November, or going in November tomorrow. What does that mean? We've had a terrible October. And November is usually one of the best months of the year. Fourth quarter is supposed to be the best month of the year. And we just had a very volatile down time in October this year. And last October was good because that's when we started to rally. But again, you can see it. It's actually April, November, and December are your three best months usually. And so, you've seen this before, and this is very important to understand. And before we continue, guys, please hit that like button there at the bottom. Give it a thumbs up. Helps people find the video. And if you like this kind of content, think about subscribing. I appreciate all you guys' support. The market wants to rally. It's going to rally. It doesn't matter what in the world is going on. You've seen it just as well as I can. And why that is because what's going on with shorts? They're going to get smoked. If this market starts to turn fast, we know how it works. We went through, how many of these last year? 4 in 2022, where it's just rip your face off, 7 to 14 day rallies. And it was like, oh, and they're heading back down, right? And so we've entered correction phase. We got below the 200. I'm about to show you what I'm talking about. And I said this just the other day, just watch out. But again, FOMC is tomorrow. They're going to rate hike. Come on, they're not. They're not. And he's going to say the same stuff he always says, right? And so the market's going to interpret it how it wants to interpret it. I think believe it or not, I actually think the Treasury news is more important because that's what it seems to be hinging on. It's like, oh, okay, we know we're raising less, but how are we going to raise it, and how is it going to affect the yields and stuff versus what Jerome Powell's going to say. He's going to say the same stuff he always says. He's never going to come out, honestly, if he did, I'd fall out of this chair and say, we're done raising rates. I would be shocked if he said that because what would happen in the market if he said that, right? I mean, come on. And we know I don't think Canada's raised the last couple of times. I don't think the European Bank has either, if I'm not mistaken. Please correct me if I'm wrong. And so you got multiple countries around the globe that have paused now. They hadn't raised in a couple months here. We haven't raised since July, I believe. And so if we pause again, what do you think the market's going to do? It's going to do the same crap it always wants to do, but it's going to use it as an excuse to say, they're paused, let's rally. How many pause rallies have we seen? So if you see MSNBC coming out with this pause effect again, you'll know the market's using that as an excuse to rally, which truth is, what is it? The market's just oversold, right? Many things are way oversold. I showed you yesterday's video. I mean, just way oversold. I mean, some of these stocks have literally been on the RSI in oversold for like over a month straight, right? And so, and if you see what's happening, I said, watch out for this. When we go below the 200, what's going to happen? We're going to retest, right? So we go down one day, we come up, retest, and now we're heading back up. So are we heading back up to retest? What we're going to see, just so happens the 200 happens to be right there over the RTH gap. That is a regular trading hours gap, which means it opened up below the previous day's high. It's only 1.16% away, and so it's not very far at all. And so all you got to do is get the Mag 7 participating in this, and you're going to be up that 200 in no time. And so we'll see if that's what we're doing right now. Again, you can try to be Nostradamus and predict that if you want to. But as you can see, that seems to be what we're doing. And if we come over here, you can also see on a smaller time frame, on a 30-minute time frame, is this what you're trying to do? You're just trying to put in higher lows, higher highs, right? That's how you start building this thing out. You pass over on the 26th high right there. We beat that one out. Now, when you look at this, you might say, man, that kind of looks like it's just doing this rising wedge, right? Which usually means it's going to puke, right, and go south and head down towards the other RDH gap. But, again, we'll find out because what else we have? Apple earnings on Thursday. So FOMC tomorrow, Apple earnings on Thursday as well. So we can't forget that. Now, looking at NASDAQ composite. Again, fall below the 200. What do we do here? Come up, retest, fail. Come up, retest, fail. Come up, retest, fail. Come up again, and now we're above the 200. We closed above the 200 on the NASDAQ composite. On the Qs, which follows the NASDAQ 100, we never reached the 200. Just remember that because of the Magnificent Seven, right? Now, this 200 right here, again, we're above it. We're sitting there. We got a fair value gap right above that. We can come up, maybe fill that if he wants to. Again, if everything's going to be bullish or whatever. But it's this one right here to me. It's the October high is what you want to pay close attention to. If you break that, that will be actually pretty dang bullish. That's what you're looking for, because that would really signify there's more strength, because that's actually like a 6.5% move up right there. And so if we can break that, usually what happens, you'll break it, you'll come back down, try not to set a newer low, you want to set a higher low, and then continue from there. Now in 2022, if you look at your chart and scroll back over, this is the exact thing we did in 2022. Okay, we broke that high and then we sold off way down from there. So if this is truly either just a correction, then we'll probably move back up. If this is actually something bigger than that, then we'll sell back down. But watch that October high, okay? Now, looking over at Tesla. Tesla had a lot of selling pressure to start the day and then ended up rallying like crazy. And I made a mistake yesterday. I said 192 was the bottom. That's my fault. It was actually yesterday's low was actually 194.78, I believe it was. And you can see when the morning started off, it gapped down and it broke that low. And so when that happened, it was like, oh boy, here we go, right? Because I know I've showed you the volume profile, showed you where the real support is actually at, but it bounced right there and proceeded to move up for the rest of the day very slowly, right? And so ended up closing above 200, which is actually a good thing for Tesla right there and anybody who likes to hold the stock. But when we bring in this, volume profile, you can see right to the left, there's a fair value gap right there, and that's where your support is at 88. Is it going to come down there? I don't know. Right now it got above 200, which puts it above that trend line right there and back in this falling wedge or falling channel, whatever you want to call it. But either way, it's a downward channel is what it is, but it's at the bottom of it, right? And so what I'll be looking for, as always with Tesla, is where's the call volume going, right? So there are a bunch of call volume coming in or not. You know how Tesla likes to move. I don't think any real news is going to come out, and supposedly Elon's tweeting all over about the Middle East, and there's some conspiracy theory, maybe it's true, that's what's hurting the stock as well. I don't know about that one. Please put in the comments if you know anything about that. Now, Nvidia, huge gap down today. I mean, this thing dropped all the way to like 394 or something, or I'm sorry, 392, and bam, just rifled back up. And this is what I talk about with manipulation right here. Look at this news. This is the dumbest thing I've ever seen. Nvidia drops by 5% to a near 5-month low on Tuesday following a Wall Street Journal report that the AI giant may be forced to cancel up to $5 billion worth of advanced chips to China. Notice the key word was maybe, and we already knew this. This is what I'm talking about. And then what they do, they bought that sucker up and ran it up. So they either, whether it was a trade or more of a long-term investment, whatever, they made a boatload of money, okay? And all it's doing, when you look at this, is just wedging its way in here, right? Now I'm going to go in here, have to put another gap, because, I mean, this thing is like one of the kings of gaps here. But that's just pure manipulation, because that news was not new. We already knew about it. The good thing was when it gapped down, it did fill an older gap, which I'm going to take these lines away. They're just kind of useless at this point in time. It did fill an older gap right here, which goes all the way back to June. So we finally got that gap out of the way. I mean, a lot of people didn't think we'd fill that one, but we finally did. So we'll get that one out the way, and the next one's the big, huge one down below. But as you can see, I mean, this Head and Shoulders, man, does that not look pretty? That looks really pretty. I mean, that is a beautiful Head and Shoulders. Again, they don't always play out, and we'll see. And as I'm looking at my phone, it looks like AMD might have just reported, because they're down in after hours. Not that that will really affect NVIDIA again, but yeah, it definitely looks like maybe that's what the problem is. And so we'll see if that drags NVIDIA down tomorrow morning. Now, what I said was weird about today is what was really green, right? Transports who have been just beat down, they got a bid. But more importantly, it wasn't even that. It was the ARK stocks, right? Anything high beta was just up huge. Maybe it was because of Pinterest. Pinterest had a huge earnings, up 19% for the day. But again, when you're looking at these, cybersecurity was up huge, defense up huge. Chinese stocks got absolutely just taken out to the woodshed. Rivian, Nickel is up. You gotta be kidding me. SoFi is a weird one. I'll get to that one in just a minute. But again, Upstart, PayPal, which has been just dead in the water, Square, all these ones. And then when you go to the Mag 7, a lot of them were just red or flat. You only had a couple of them like Tesla and AMD. They were actually up, right? And AMD is not really Mag 7, but I just put it in there anyway. Now, SoFi, I was going to cover this yesterday, I forgot, but this thing reports earnings, double beat, raises the year-end guidance, and sells off completely after like a 16% run, right? And then gaps up again today. I didn't see any news. Maybe it was just, I don't know what it was. It was just weird. But like, again, everything high beta ends up going up. All fintech went up, right? So maybe that's what it is. But this is another one of stocks. It's just in the hurt locker, right? It's been in this range right there. It had a false breakout, I guess you want to call it that, since last March, right? I mean, this thing is just looking for stage 2. It's still in stage 1, really, if you look at it. So, and again, a lot of resistance. If it can get above that, great. But fintech has just been the doghouse and just needs to get out of it. So it's not like it's SoFi's fault. It's just fintech in general. Now, earnings, you're going to have more travel with Norwegian Cruise Lines, CVS, Humana, Wayfair, Kraft Heinz. We'll see if they're still passing on prices. Trust me, I buy a lot of mac and cheese. And so they've been raising prices on that, I know. Now, PayPal needs a good earnings. This thing needs to get out of the doghouse. Roku, Qualcomm, Supermicro, Solar Edge, Airbnb, Etsy, Mercado Libre, Elf at the bottom. I mean, it's just a boatload of earnings going to come out tomorrow along with FOMC. And I know it was First Solar actually reported better. I don't know how the stock reacted, but so we'll see if this other solar company does well too. Now, a lot of economic data tomorrow. You're going to have ADP employment change at 8:15, so the market will react off that one for sure. Treasury refunding announcement pre-market, so that's what's going to tell us how they're going to raise all this crazy amount of debt. Global manufacturing PMI, construction spending, ISM manufacturing, JOLTS job report. Now this is after the bell opens, so pay close attention to that because you might see a major shift in the market. JOLTS jobs quits, a lot of different crude oil inventory stuff going out. Nobody's going to care about that. And then the big one's going to be, you're going to have the Fed interest rate decision, which I still bet. Put in the comments what you think. I think it's going to be no rate hike. And then you're going to have Jerome Powell, of course, at 2:30, come out and flap his lips and just say the same old thing, which is basically nothing. We need to keep it tighter. Maybe there's probably another rate hike on there. And again, you've seen the market. He may say the exact same thing. You can put a recording of this man out there, and the market will react differently every time, right? And so it may say, oh, he sounds so hawkish, or he sounds so bullish, but it's the same thing. He doesn't say anything new. Right, and so we'll just see which way they want to use it to push this market, which way they want to use it to grab liquidity. And one thing we definitely know tomorrow, I would expect a super volatile day on steroids tomorrow. I'll be shocked if we just get flatline and start barcoding. I mean, usually, especially with all that economic data coming out, you know, whoo, I mean, come on. And so I hope you guys got something out of it. Hit the like and subscribe button you did. Appreciate all you guys, man. And I will see you for another exciting day tomorrow. Have a good one, guys.